Welcome back to Rochester Living with Mark Siwiec and Corey James Moran, brought to you by Elysian Homes by Mark Siwiec and Associates. This is episode 190. Mark, hello, how are you?
I'm cold.
Welcome to winter 17.
can you
I don't know
believe
how many winters has it been so far?
I don't know. It just keeps going. It just keeps perpetuating itself.
I
It's
wasn't
insane.
expecting on April 8th to be driving my son to school in literally a whiteout.
Yeah.
It's what it was. This is crazy.
Yeah. By the way, I'm tired. So if I if I'm stumbling through this, but then again, I'm talking to you. You've got 3 kids. You're always
Don't
tired.
complain to me about no
I'm not
sleep.
complaining. I'm just making a statement of that. Oh,
Give me your phone. I'm going to set alarms for about 7 of them for tonight. And that should really simulate what it's like. And make sure you
Sounds
stay
good.
up for a good
Sounds
25
good.
to 30 minutes.
As soon as this is done, I will hand you my phone.
That's what we'll do.
Yeah, I won't give you the code, but I'll hand you my phone.
You know, the weather today, I will
Yeah.
say, there's a bit of an analogy here with what we're seeing with the economy. We're in a whiteout, right? We can see 3 feet in front of our face right now, and the rest of it, we have no idea.
Well, how about this as an analogy? Here it is. It's winter. Give it a few minutes. We'll find spring. Tomorrow morning we'll wake up. It'll be summer. I mean, that's a good analogy.
Hopefully.
Mercurial weather patterns, identical to those of the U.S. stock market. How's that?
Well, we have a guest that's going to guide us through this.
Great.
Zachary Harrington, welcome.
That was good. That was very
You're
smooth.
professional, Corey.
Of course.
Yeah,
I mean,
that
it's
was
the
the time
weaving
frame.
in and out, right?
Absolutely.
That was great.
You're one of the partners. You're the chief investment officer at Rise Advisors. And shockingly, we were just chatting before we started here. Your phone is not smoking right now. I thought that there would just be flames shooting off of it from panicked people. And
Yeah, I think it's a testament to our process and what we do as financial planners. But I think at the firm last week, as far as inbound calls, like I think 6 or 7 probably was the number. But
Come on, you're
proactively
really?
communicating,
Isn't that wild?
not hiding from things, and
Yeah.
people know that and trust that we're going to do the right thing. And so, I mean, by mid-morning Friday, we had a 15-minute video out to all of our clients.
Yeah, and
kind of
which I saw,
talking
which was
through
really well
all
done.
those things.
Yeah,
And
yeah.
So no, it's certainly an uncertain time. I think the snow analogy is perfect. I was on 590 headed here, and everybody's got their 4-ways on, and
Yep.
I feel like that's the state of the world right now. We're going to wake up one day to a Truth Social post that tells us they're on, they're off, they're 900%, they're
Just don't know.
0%.
Just
and
don't
we'll see
know
what
yet.
happens.
And so much of what it is we're experiencing is all dependent upon what side of the bed Donald Trump wakes up out. I mean, like
Or Peter Navarro.
or Peter Navarro.
I think that's the driver.
Can I just dive? Like, is that guy a moron, or is it just me? I mean, like, I'm not really impressed with Peter. Well, actually, we're trade representative. He hasn't impressed me thus far.
Elon Musk isn't a fan. Nobody seems to really be, and we'll figure there.
We should probably just stop right now.
Okay, let's keep politics out of this, because this is the point where I have to disclose that these opinions are mine.
There we
and
go,
not
yeah.
that
Let's
of
get out of the
Rise
way.
Advisors or Stephanie or Mark.
Well, if Elon Musk doesn't like him,
let's set the table here. Hopefully, we can maybe have some reassurance by the end of this podcast, chat about what's going on. But let's start with just our market update of where things stand.
that sounds good.
It's a little bit different this week because we're recording on a Tuesday. Normally, we record on a Wednesday. But numbers are up. Monroe County, we're at 387 for single-family active listings. It's up from 368.
Okay.
Still, whatever. 6 County region, we're at 645 right now. That's up from 622. Under contract and pending, that number continues to jump up. We're at 862, up from 833. And for the 6 County region, we're at 1290, up from 1249. So numbers slowly rising.
But if you think back to April of last year,
Yeah.
I mean, 800 and some contracts that are currently pending. I mean, we were looking at 1,050, 1,100, something like that last year this time. So, yeah, it really is slow. It continues to be slow. I'm not sure when that's going to change, but it doesn't look like it's going to be anytime soon.
Well, tons of uncertainty always helps with that, right?
Yeah, right.
With major
right, yeah,
life
yeah.
purchases
Yeah.
And wanting to move and get your new house. Let's chat about rates really quick.
What time is it?
I don't mean to laugh.
Yeah,
It's
you
like,
should.
I'm sure you've changed that 6 times in the last 24 hours.
Basically, yeah. I mean, so Friday, we had the lowest rates of the year. It was 6.55, right? Yeah. Last checked, and again, it could be changing as we speak. We're at 6.82, the highest of the year.
Yeah.
In a literal Friday to now again here on Tuesday.
Well, and the interesting part with that too is the 10-year yield sitting at 4.28, somewhere like that this morning. It's still 50 or 60 basis points off of the highs that we saw right around late January.
4.6 or
And
something. Yeah.
Which that to me is almost a bigger worry of why rates have come up, because that to me is starting to show some just access to capital starting to tighten up. Where
Sure.
you have your normal yield movement that determines the prevailing rate of lending, but when you have so much Fed uncertainty and you have so much economic uncertainty, you can tell that some of these mortgage lenders are starting to tighten their pockets a little bit.
Yeah. Well, and I'm wondering how much the bond market, and we're getting really, so we're gonna try and make sure that over the course of the next 45 minutes or so, we're just having a conversation that isn't so inside baseball that it's hard for anybody. So
just explain it to me like I'm 5 years old.
We can have that be the preface of the conversation for sure.
I'm wondering how much the bond market is beginning to think, okay, this may be a short-term shock, and that we're going to revert to some normalcy over the course of the next few days, the next few weeks.
Yeah, I think time will tell on that, and I think it's like with anything. Like if we want to simplify this to explain it to a 5-year-old, or like I'll explain this to my mother. It's when you're lending money, it's like you're lending money to a person, right? Like if we want to oversimplify the bond market. So I'm sure there's people in your life, your cousin John, who has a 800 FICO score, has never missed a bill, and you're like, you know what, John, I'm comfortable lending you money.
Sure, low risk, very low risk.
And then you have your cousin Larry, who's had a couple of run-ins with the law, has some poor credit, and those terms are going to look very different. And I think that's what we're seeing in the bond market right now. So if we look at the high-yield junk bond space, those spreads have widened immensely in the last week because there's so much economic uncertainty. Right. And I think that's what's taking place, is a lot of people are trying to pick what's next. I think it takes weeks to solve, and if anything, like yesterday in the stock market, we had a pretty interesting about 11 minutes. So there was a tweet that came out, allegedly from the White House, that there was going to be this 90-day pause on the tariffs for everybody but China. The market went from down about 4%, depending on what indice you're looking at, to up 4%. This massive swing.
Oops.
And then in about 6 minutes after that, the White House came out and Caroline Leavitt's like, this wasn't accurate, and the market sells back off 4%. So there's just so much pent-up angst in fixed income markets and equity markets that it's going to take some time to sort out. And I think at the end of the day, there's one person who's going to determine the outcome of that.
Yeah, and we literally, I don't think that the president himself knows at this very moment where this is headed. I think that he has no long-term strategy. He's just going to, as he has throughout his career in business, take advantage of the moment, take advantage of the opportunity that the moment presents, and run with it that way. I mean, perhaps he's got a strategy having to do with China, but other than that, I mean, I really can't see anything that. I mean, you've probably heard the rumors also that so much of the tariff policies that were announced last week were simply generated by ChatGPT.
So when I look at it, I do think there's long-term strategy or optionality to it. To me, it's the shorter term concern. When I say short term, I'm thinking 30 to 90 days out. So I think the long-term vision of this administration that they kind of made clear throughout the campaign trail, and they made clear in their first 80 days or so in office, is they value manufacturing and industrial process jobs here in the United States. And I have a friend who asked me one time, he goes, what keeps you up at night? And what keeps me up at night is AI. And so if we zoom out the last 50 years, so throughout the 70s, 80s, and early 90s, we outsourced all of our industrial and manufacturing capabilities abroad. We took an economy like China, which in the early 90s, I was born in 92. In the early 90s, China was like the 30th largest emerging economy. They're now the second largest economy on earth. We created that by outsourcing our industrial process and manufacturing. We then became a service-based economy. So when you look at, nobody does software and finance and IT services and all of these things better than we do.
High margin, very, very high margin. Yes, yeah.
And those margins, if Wall Street had their way, would continue to expand, right? By automation, AI, and just continuing to diminish human labor. And so with that, I think that what the Trump administration is trying to solve is, we have a lot of people in these service-based jobs. Like if you've played around with ChatGPT or Grok or any of these AI platforms.
Probably not Grok, but go ahead.
Sure, that's fair.
That's your favorite, Mark. Come on.
So when you look at it, these AI learned language models are incredibly efficient today. They're only going to get better. As the computer processing picks up, as the chips get better, as people learn how to implement them better, they're going to be great. And when you look at like what Salesforce and Mark Benioff have outsourced for their basically virtual assistant, anybody who's in a healthcare administration job right now, who's in a customer service job, a call center, anything like that, those jobs are going to be eroded and eradicated over the next 10 years.
Look at radiology, look at accounting. Yeah.
And so when I look at any of these things, I think that we have to do something. And I think most people would agree with that. Like, we have to do something to onshore some of these manufacturing jobs so that people have something to do. If not, I worry about the big picture. So that's what keeps me up at night. But is this the right way to go about it? I don't
that's
know.
where I was headed.
Well, and the
I mean-
speed, I think, is what really is
Yeah,
concerning.
exactly. Yeah, like use a scalpel. Don't use a sledgehammer. Like,
Yeah,
that's
not the
the crux of
chainsaw.
it. Yeah.
Right. I mean, in regard to China, I think that it is the right policy, but let's do this gradually. And let's focus on China. I mean, why the hell are we taxing Canada? Why are we taxing Mexico? Why are we taxing the EU? I mean, dear Lord. I mean, maybe there's some reason, but suddenly we find that Ursula von der Leyen is now incredibly more powerful than she was just a couple of weeks ago.
Yeah.
Because she now is going to oversee an economic powerhouse that will rival that of the United States. So
Yeah, I still think the EU has some systemic problems when it comes to aging populations, things like that. That's not for this conversation. But I think it's become very clear that part of this policy is targeting two parties. China, you're absolutely right.
Yes.
What they've done over these last 6 or 7 years to get really creative in evading our tariffs, that's why, like, you look at a country like Vietnam, they've come under so much pressure. Because China basically creates these subsidiaries in Vietnam, moves their goods through portable natures to these other companies and avoids a big tariff and plays some arbitrage with us. I think the EU is the other one. I think that this administration is very obsessed with this whole concept of trade deficit and VAT taxes and barriers of doing business and all of these things. I think if we fast forward 6 months, I think that a lot of the reciprocal tariffs are resolved. They're resolved on a country-by-country basis. We've already seen Scott Bessent hit at it. We've already seen Trump himself yesterday come out and say it. I think the one that doesn't get resolved...
And my apologies. And Elon Musk saying, you know what, we want zero trade with the EU.
Correct.
So,
Go net zero on
net
tariffs,
zero,
and let's
exactly,
just try and make this work. I think over the next 6 months, that's what plays out. The China one is a whole nother issue, and that starts to become what seems like the root of all of this. So that obviously has bigger kind of issues, but I do think the 10% flat tariff that was put into place is here to stay. It's very similar to the value add tax, the VAT tax you see throughout Europe. It's a cost of doing business here, and it's also a way to try and get our deficit spending from 7% of GDP closer to that 3% number that's more sustainable. So yeah, it's every day it's like, what are we going to wake up and see? And I think markets are looking for some certainty, which is why mortgage rates are fluctuating, why there's, in what competent CEO or CFO is going to sit here right now and make a $500 million plus investment on, setting up a manufacturing facility or doing anything like this.
So let's go back to that. I mean, we could go down any number of paths here. I mean, first of all, back to the EU. I mean, instead of embracing them, I mean, we have 340 million Americans. That's the population of the U.S. The EU, what is it, like 459 million? I mean, like, they have 110 more. That is a powerhouse, and certainly their GDP is smaller than ours, but we have now empowered them to rival us in a way, and we've also encouraged our trading partners, our allies throughout the globe, to now embrace or turn to China in a way that they weren't thinking of doing not more than 2 weeks ago, 10 days ago.
I think a lot of that whole, like, shifting towards and strengthening the relationships with China is just posturing and rhetoric.
Okay.
I don't know how much of that can take place because you're still dealing with, when you're dealing with the Chinese economy and you're dealing with outsourcing labor and increasing the theft of intellectual property is an incredible problem. When you look at what a lot of these just kind of third-party companies that are owned by the Chinese Communist Party are doing, the theft
TikTok.
of... Sure. No, not even that. Like, when I'm looking at like a Shein or a Temu or things like that, like the creating of cheap goods that are just as a meant of trying to take consumers away from proprietary products is a real problem. That theft of intellectual property, the currency valuations and fluctuations. Like, in response to these tariffs, they've devalued the yen. They've done all of these other things. And that's still a headwind when you go to do business with them. And so I do agree that the speed at which things are done, the shotgun approach of what things are done, not the right order. I still think they get resolved, but it's certainly messy.
I agree. I think they get resolved.
It'll be messy, very, very messy.
Yeah. But what are the long-term consequences, both in terms of our economy and our standing in the world? I mean, so we want to bring all this manufacturing to the United States. I don't see it happening. I just don't see it happening because there was the video that was circulated, and Peter Navarro himself, was quoted the other day in one of the talk shows that we're going to build factories here in the United States. Well, all right, that's a 10-year proposition, 5-year, 10-year proposition. And then he's talking about the fact that because American workers want to be able to sit in factories and screw screws into items, and it's just like, and he's describing this process. There's nobody in this country who, and part of the unhappiness, the grievance of the middle class and the blue-collar middle class is that they aren't being paid the wages that they were back in the 70s and the early 80s when they were working in auto factories. Nobody's going to pay them $25, $30 to screw something into another object. So I think that it is misguided. And even if we are successful in bringing manufacturing back to the United States, and even if it does happen 10 years down the road, at what expense have we diminished our ability to attract trade partners and others who are going to want to work with the United States? I mean, uncertainty. I mean, people, especially if you're a tech titan, especially if, a titan of business or Wall Street, people or anybody from overseas, they want stability. And we are proving that we are no longer the stable country that we were. They are looking for continuity. They are looking for rule of law. They're looking for. So I'm fearful that, yes, let's say that he is successful in bringing factories back. I don't know. I mean, whether or not we will have accomplished what it is that he had set out, because he's so damaged the reputation of the United States as a good trading partner.
Well, I mean, even think about what I think is number one on every American's mind, and that is affordability, right? What's it going to cost if we're able to pull that off? It's not going to be what prices are now, because it's going to be, I mean, there was a reason why manufacturing was pushed overseas, because it was a lot cheaper for these companies to operate that way, and they could pass the savings on to the consumer.
We would not have a
they were
shame
passing the savings on based on an earnings expansion to shareholders. So that's the big thing in all of this, is those free trade agreements were basically this belief throughout the late 80s and early 90s that corporations deserved autonomy over their supply chain. And so as soon as that rhetoric started getting put into a law that allowed these companies to begin to outsource these jobs, yes, you had a deflationary pressure on the price of goods, but you also had the deflationary pressure on wages. And if wage growth outpaces the cost of goods, then inflation's not a problem. And that's why if you look at these last 5 years, inflation has been such a problem. So you have, and I put this in our video we sent out to clients on Friday, and I was actually laughing because Ray Dalio, I was sitting in the sauna this morning at the gym, and Ray Dalio
Wait, at your gym?
Yes, at the gym. I don't have one at my house.
Ray Dalio was in Midtown?
No, Ray Dalio was on CNBC, and I had my headphones in. I live a privileged existence. But he referenced the same talking point we sent in our video on Friday, which was, I found 2 back-to-back headlines written within a week of each other. One was from the Wall Street Journal, and it said that if you look at the consumer spending habits, the top 10% of the U.S. population today represents 50% of consumer spending. So top 10% of the population is defined as $250,000 or greater of household income, or $500,000 or greater of investable assets. That's kind of what is the dividing line of the top decile. 60% of the population cannot afford a $1,000 emergency expense.
Right.
That's the problem we're dealing with, right? Yeah. The problem in what's trying to be solved, and we're this big part of the population. Yes, like thinking that we're going to reopen Rochester products down on Lee and Lexington and have people bolting wheels back onto cars is highly unlikely. That can be automated really efficiently. Yeah. But we're using automation abroad. So if we're using the automation abroad anyway, like, can we do something that helps close this gap? Because I also talked about this whole vicious circle right now that we're in. Those of us who are fortunate enough to be in that top decile of society, which I'm assuming is a lot of people who are doing business with Elysian Homes, because you guys are a premium real estate brokerage, we have not felt the impact of these last 5 years as much. When I go to the grocery store, I'm not necessarily looking at egg prices or things like that. I'm buying them because I need them.
Yes.
There's a portion of the population that feels left behind because they didn't necessarily have money in the stock market. They didn't have money in their high yield savings accounts that's earning extra interest.
They didn't have real estate.
They don't have real estate that's up 60, 70, 80% over the last 5 years, depending on where you are. What they did have is they had a leased car, and the cost of capital on that new car lease plus the cost increase of that car is eroding their monthly cash flow. Their rents have substantially increased. Yes. They finally thought they were at a point of home affordability, and interest rates tripled. So we need to do something to solve this. And I think that's the crux of the problem. Like, when we tie this back to real estate, to me, it comes down to what tranche of real estate are we talking through, right? Like if we're talking about that first-time home buyer, that's a completely different discussion than it is the couple in their late 40s who are in their peak earning years who are looking to buy that forever home that may be subject to a mansion tax.
Yeah.
Or the property owner who is looking to add a multifamily unit to their portfolio. Like there's so much difference here. And I think that one of the other things too that reigns true, if we look at like the macro US economy, single family housing starts to me still remains the largest constraint in real estate.
You're absolutely right.
The amount of like we get pitch decks all the time from private equity groups and developers and all these things. So they want our client assets to be invested into these projects. I couldn't tell you the last time I had somebody come and be like, "Hey, we're starting a single family housing track at under $350,000 start price." They don't exist.
Yeah.
We said you did a webinar and podcast for us 3 years ago.
Yep.
And you said on that podcast and you said record low housing starts in Monroe County, record low inventory. The only way we're going to work ourselves out of this is having affordable single family starter homes.
And that was 3 years ago.
And nothing's changed.
And well, there is one thing that has changed. There is a greater need and greater demand today than there was 3 years ago.
Do you know what's changed? Do you know what they solved it? Just go multifamily and we'll make everybody renters.
Yeah,
Let's abolish the American dream of homeownership.
That is it. But here in Monroe County, we are shy 18,000 units. I mean, that's pretty significant. I mean, that's...
Yep, do that as a relative portion of GDP, like of our overall population in the local economy, right? Like it's huge. And so that's the problem I look at is like when I look at predominantly what Elysian does or like what a lot of Rochester realtors are doing right now, you're selling existing homes. I try and look at it. I was just having a conversation with a client last week. They're in the market right now. They're in the $750,000 and up range for a purchase price. And they're trying to decide, like, is this a right time? Well, when you look at the amount of lumber and materials and all of those things that are imported from a Canada, from a Mexico, from abroad, like those costs are all going up tomorrow.
Absolutely.
And so I look at it and go, at $300+ a square foot on a new home construction, this was conservatively, correct? Like is like, that's a lot of carpet in the house. Like maybe some luxury vinyl tile in the kitchen. Like we're not talking hardwoods and Viking appliances. Like we're talking LG and GE. So at $300+ a square foot, that number probably becomes $330 effective Thursday, right?
Yeah.
And so when I look at like the economic pressures and headwinds of home purchases, I look at it objectively and say, if I'm selling a single family home or I'm looking to buy a single family home in that $500,000 and up range here in Rochester, I think you almost have a put on the price or a floor that's been created because there's no other competition.
Right.
It's apples and oranges. If you go buy a 3,000 square foot house in Penfield or Victor or Greece or Hilton, you're going to pay on an existing home, let's say $80 to $90 less a square foot.
Yeah.
That is going to remain consistent as these tariffs come into play. So I look at it, I don't think these tariffs have a massive impact on single family home purchases of existing homes.
I agree with that for any number of reasons. I mean, if nothing else, it's a flight to safety.
Sure.
So if one doesn't want to be involved in the stock market because of concerns of volatility or loss of income, terrific. I mean, we are going to have a deficit in terms of the number of properties that are available for sale here in Monroe County for the next 5 years minimum. I mean, this is a blog that I wrote. I think you even read it. Yeah. Buy now, even if you're even if you're quote unquote overpaying for your single family home today. We've been saying the same thing to our clients for the past 5 years. Yes, you might be overpaying today, but a year from now, 2 years from now, you will have recouped anything that you felt as though you overpaid, and then some. You know, and as we always say, 5 years ago, I'm out of the market. I'm not gonna overpay. I'm not gonna pay $100,000 over list price. Well, congratulations.
Well, now you would have spent $150,000 under list price.
Exactly. Yeah. So and you lost out on the opportunity to enjoy a 60-some% increase in the value of that property these past 5 years.
I had a client actually last week that finally got a house under contract. We started our search in 2022.
Okay.
And they were talking about, really should have pushed a little harder back then.
Well, I remember I was sharing the story with you over the weekend. So one of my best friends bought a house in May of 2020. They toured it on FaceTime. Yeah. And they sold their home, they moved there. And I was like, how could you do that in this period of uncertainty? I'm the idiot. I don't know what the expletives are on this, but I'm the
go right
idiot.
ahead.
Okay. I'm the idiot who sold his house at 2 1/8 on my 15 year because we had another baby on the way, and bought a house at 6 1/4 at 60% higher than where it was in 2023. And so I look at it as, when we're talking about the people who'd be watching this and people who are clients of Elysian Homes, this isn't your first rodeo, right? Like, in all likelihood, this isn't your first home. It's not your last home, but you're looking for an upgrade. You're looking for more space. You're looking for a different neighborhood, so on and so forth. I look at a home or real estate no different than I would any other asset in their financial plan. So there's a chance today that if you were to take your capital and deploy it in the stock market, you could buy Apple today. And little do we know, Apple's down 20 to 25% from where it's at.
Apple's going to be decimated
How
these
is
next
that
few
any
weeks.
different than a single family home?
Yeah.
There is always the chance that you could buy something and you bought at the top. But if you look at it as a long-term investment, which I think you should, over a long enough period of time, you're going to be fine. And I think that's the problem from a financial planning lens. So many times people don't realize that their home is an asset. It's human behavior, right? Like, you don't want to leverage it. You want to get that paid off. It's the sense of security. There's all these things. But in reality, it's no different than any other asset.
Well, it's usually the biggest asset, too, in many
Correct,
instances.
for the vast majority of people. So I look at it right now, and I think there's actually a lot of tailwinds in real estate currently. So number one, like, if you're looking to deploy cash, if you're looking to basically take that next step on the home, putting that cash to work in something that's physical and tangible, it has intrinsic value, right?
Yeah.
If you go and put money in the stock market right now, even if you bought the broad index, so you just bought the S&P 500, how can you confidently look at any of these companies' valuations with how uncertain things are and think that those earnings estimates are accurate? What I can do is I can look and say with certainty that this physical home, as long as I maintain it here in Rochester, New York, like, it's not like we run the risk of a massive industry lead. Like, Kodak's already gone. Bausch & Lomb's already gone. Xerox is already gone. We've already done that. We had the lost decade in Rochester real estate, right? We're at a point right now where, like, you're at least retaining asset value, if not appreciating modestly with inflation over the 5-year term. The other thing I think is super important, too, is if you bought a house in the next 60 days, the likelihood of you being able to refinance that at an incredibly lower cost over the next 24 to 36 months, I think is with high certainty. Mm-hmm. And so that's where I look at it, and you almost start to play the game of, you're buying a house right now that may feel like valuations are stretched and cost of capital is high. And within 2 years, you might be able to get a 15-year mortgage at a rate that keeps your property and escrow payment virtually identical, and you're way ahead 2 years from now.
Let's set all that aside. Let's assume that you buy a house today, you overpay for it, and it loses value over the course of the next 30 years. You're still ahead, because in 30 years, you're not, you're retired. You're not supposed to be working to pay rent to a landlord. So just the privilege of owning an asset, owning the roof over your head, there's a lot to be said for that. Now, of course, I'm being extreme. That's not going to happen.
Correct, yeah.
But let's assume that is the case. You've at least got an asset, and you're not, for the remainder of your life, having to shell out money month after month after month, paying your landlord for something that you should own free and clear on your own.
Yeah, and if we look at it objectively, like, I think if we look at it broader, if we have a 30-year period in which physical real estate property is depreciated over 30 years, could you imagine what happened to everything else?
True.
Like, when we talk about,
it would have to be Armageddon.
like, nuclear winter.
I was just going to say,
That's what we're
exactly.
talking about, right? Like, so you're at least pacing inflation. You're at least staying flat. And I just look at it and say, as long as you're not overextending yourself when it comes to, like, job risk, right? It's a completely different discussion if you're sitting here and you're working in a sector of the economy that's highly reflected or impacted by tariffs. But when we look at Rochester real estate and the top employers in the area, Paychex is not drastically impacted by tariffs. University of Rochester Medical Center is not drastically impacted by tariffs. Sure, is the research portion maybe a little bit impacted by government funding?
I was going to say, we get DOGE cuts to worry about.
That's a different discussion. Healthcare is going to continue to dominate.
Yes.
And then the other beautiful part of Rochester is the amount of small businesses.
Right.
So many people who I'm sure you encounter from your clientele on a daily basis. It's a family-owned business. It's a family-owned business that maybe is a local tool and die shop or manufacturing facility or is a marketing agency or whatever it might be. Like, that's the beauty of Rochester. We've weathered some of the bigger macro stuff of companies doing layoffs and big corporations and all these things, we've weathered this. We lived through it throughout the late 90s
It's
and
remarkable that
early
we've
2000s.
emerged from all that as healthy as we are, because it is a very, very entrepreneurial town.
It is.
No two
and
ways
so
about
when
it.
I look at that, like, I just would say that if any city or metro area can weather this well, it's Rochester. We're not dependent on big corporations. It's a limited scope of impact when it comes to imported goods and things like that. And you talk to a lot of small businesses, and they're pretty well insulated from it. Sure, have their 401ks and IRAs and brokerage
Don't
accounts
look.
taken a
Don't
hit.
look, right?
I would agree with that. I think
But
that's a big thing.
it'll come back. It will come back. You know, I think the shock that we're experiencing today is far different from the shock that we experienced that was related to COVID. And it could be longer, but it's going to come back. No two ways about it.
So we already lived through this. So June of 2018, Donald Trump on June 24th, 2018, put a tweet out. And it was the start of Tariff Tantrum 1.0.
Tariff tantrum.
And so Tariff Tantrum 1.0 started June 24th, 2018. And from basically June 24th through the end of the year, the S&P sells off over 18%. Sound familiar?
Yep, I remember.
Ton of uncertainty, ton of trade war with China, attacking EU, deficit spending, NATO, so on and so forth. It's the same exact talking points. We just kicked the can down the road 7 years.
And added a bunch of additional countries to the rant.
Of course.
Yeah.
And so I think we're just at this point where, like, we've lived through this, and by May 1st of 2019, so within a calendar year, the S&P 500 was back above where it was when Tariff Tantrum 1.0 started. So I look at it today, and if you're an investor and you're sitting there looking at your investment account and assuming you were diversified and you weren't overextended into tech growth names, like, your bonds have behaved as a ballast, right? So yields are high. So as economic uncertainty happens and yields come down, expecting rates to go lower, your bonds appreciate in value. And that's exactly what's taken place. If you look at the last 10 days in the market, your bond assets are up anywhere from 4 to 7%, depending on how much duration you took on, and your stocks are down 16 to 20. So, like, it's ballast, it's worked itself out. To me, the most scary part that we've weathered as investors in the last decade was 2022. So in 2022, with that rate hiking environment, you had yields at record lows, interest rates at record lows, you had slowing growth, tech concerns, and a rising interest rate environment. So your bonds didn't act as a ballast. So if I'm an investor today, I'm sitting there and I'm saying, I'm in this for the long haul, I'm rebalancing as appropriate, and I'm not letting these things that are likely going to be reshuffled and redealt and redone in the next 90 to 180 days determining what I'm going to do with my family or my future.
I'm going to go back to something I said a moment ago, which is it is going to return. I'm just not quite sure. I'm not as sure, and you're the expert. So you know, let's just start there.
Far from it, but yeah.
No, you're the expert. So, but I'm not quite sure if it's going to return as quickly. Frankly, I'm concerned about stagflation.
Of course.
I am concerned about employment rate rising and unemployment increasing.
Well, Mark, reset stagflation.
So stagflation is unemployment increasing, growth as measured by GDP falling, and inflation increasing. You know, it's just like this tsunami, this coming together of all these forces. That's my concern. And if that's the case, holy shit. I mean, like, you know, and there's no easy way out of that.
So stagflation is rare. I think that's important to talk to.
It is rare. It's what, 20, 45, almost 50 years ago,
Correct.
45 years
Yep,
ago. Yeah,
exactly. So mid to late 70s was the last time we really dealt with it. And this was something we put out. So we are regularly putting out content to our investors. And so one of the things we talked about in January was there were some canaries in the coal mine that the Fed, I think the Fed holds a lot of the cards here when it comes to the stagflation risk. And so if we zoom out and we go back to, this is maybe not explaining it to a 5-year-old or fifth grader. I'm going to go freshman in college.
Okay, sure.
Okay. So we're sitting in macroeconomics 101, and there's a concept known as M2 money supply. So in a super simplistic sense, M2 money supply is all money in circulation. So checking accounts, savings accounts, bond assets, so on and so forth. It's what's circulating in the U.S. economy. Traditionally, M2 money supply grows at 5 to 7% a year, somewhere in that range. In 2021, M2 money supply peaked in June at a year-over-year growth rate of around 36%. Because we had and this is where I think our federal government failed us throughout the end of 2020 and the start of 2021. Both candidates in 2020 ran on this concept that the U.S. economy was in dire straits. And it wasn't the case. We weathered COVID quite well.
Yeah.
But that 2020 election was so heated and the rhetoric was just so negative. And whichever candidate won was going to do the same thing. But when you look at Inflation Reduction Act, Build Back Better, child tax credits, all of these things, we gave Narcan to an economy that didn't need it. And so you basically gave the U.S. economy speed. So in June of 2021, which also
and this is on top of PPP.
Correct.
So you get PPP, and then you got the CHIPS
EIDL.
Act, you got the Inflation Reduction Act, all that. Yeah.
So M2 money supply peaks at 36% year over year growth in the summer of 2021. If you look at what else peaked then, inflation. So CPI peaked in July of 2021, right? So we
Makes
have
sense, yeah.
all of this money supply here. The next month's reading is hot because there's all this fake money.
I think it was
in the economy.
9.1% or something.
I think it was low double digits. I think it was like closer to 11.
Wow.
But nonetheless, like we gave the economy Narcan, private industry hiring. If you remember back to those days, like I don't remember seeing an Amazon truck prior to like January of 21. Now, I mean, there's 17 of them driving through my neighborhood at all times. Private industry job growth peaked in June of 2021. CFOs and corporations took advantage of cheap money and endless money supply to make all of these capital expenditures and all of these hiring practices. And from the summer of 2021 through the end of 2024, month over month, there was no private industry job growth. It was negative job growth for the better part of 3.5 years. The only thing that was keeping the labor market propped up was government deficit
I was going to
spending.
say, yeah.
And so we warned our investors in early January saying, if the Trump administration comes in and they do what they're going to do, they want to solve the immigration problem, they want to stop government deficit spending, they want to be hard on tariffs, they want to deregulate, and they want to do tax cuts. Those were the 5 core things. If they're going to go ahead and do this, we need to be prepared that the Fed is going to have to act because the labor market is not as strong as the Fed keeps touting it is.
Because so much of it's all government.
It's all government deficit
employees.
spending.
Yeah.
So when I think about it from a stagflation lens, if we can get the Tax Cuts and Jobs Act into permanent law, because the Tax Cuts and Jobs Act, our current tax code, sunsets at the end of this year. I think they get the extension. I think it comes with an increase in the SALT tax cap, which for all of us in New York State who are higher income earners is a welcomed blessing. I think that's some of the give and take that's going to happen. But I think if we can get the deregulation and tax cuts done, that should be enough pro-growth. And if rates can come down, that should help offset some of the inflationary pressures that are likely transitory because of tariffs. So I think stagflation is certainly a real possibility, but I think the odds are low. If I got injected with True Serum and said your life and professional career depends on what the next 12 months looks like, I think that by this time next year, the only real tariff issue besides the 10% flat tariff remains on China. I think that interest rates and the Fed's cut 125 basis points on the Fed fund rate. I think that we've passed deregulation on banks, deregulation on like just general business and energy, and I think that the Tax Cuts and Jobs Act has been made permanent law, which I think overall solves the stagflation problem. But that's a lot to ask of our elected officials in a 12-month period.
What do you mean?
Right? Like that's the issue.
They get so much accomplished.
And again, I mean, I know that I'm on this rant, but let's go back to how we started this. Tomorrow, 3 months from now, 6 months from now, what side of the bed does Donald Trump wake up on? And what is going to be the far-fetched plan that he hatches that day so that it's rant 3.0 as opposed to 2.0, which is, tariff rant 2.0, which is what we're living through right now. So I don't know. I do know this, that at least Corey and I are very, very fortunate that we're in an industry that we know Donald Trump is going to protect at all costs.
True.
Which is there is some salvation there. And more likely than not, a year from May, 13 months from now, more likely than not, Jerome Powell will probably, whether or not your forecast is accurate, and it probably is, but whether it is or not, we're going to be getting a new Fed chair next year who will more likely than not pay attention to...
Be a little more hawkish, a little more in line with the administration.
Yes, exactly. And interest rates will come down as a result of that. So.
And the other thing, too, I think we have to keep in mind is there's nothing that elected officials love more than maintaining their seats. And so Ted Cruz came out at the end of last week. And Ted Cruz, who for the better part of the last 6 or 7 years, ever since Trump called his wife a dog during the debates, has been in his pocket.
Has been in a lapdog
right?
for.
Exactly.
Yeah.
And so for him to come out and kind of be against a lot of this stuff, to me is the canary in the coal mine of the GOP is going to give him some runway here for the next 90 days. But if we get to a point where they think midterms are dead in the water, they're not going to risk losing these seats. They're going to get involved from a legislative standpoint to try and overact some of these tariffs. And that's where I think the cooler heads prevail.
Yeah.
Part of it helps with my angst and anxiety around the state of the world. I like to believe this is just art of the deal in person that we're seeing. And
or saber rattling and posturing and aggressive nature.
I think it sorts itself out. The greater repercussions are something that will be solved by nobody here, and we'll see what comes of it. Like, the state of the world is weird, but if we can get some of these things more permanent, at the end of the day, like, investors and people with money, they want to put their money in a place that's going to have benefit. And when private enterprise and government work hand in hand to write thoughtful legislation, good things come of it. And I think opportunity zones are one of those things. And then the other piece of it is, like, the one thing they got wrong with Tax Cuts and Jobs Act is SALT tax caps. For all of us who live in New York State and who are paying property taxes here in Monroe County, those of us who listen to this who are in Ontario County and have that safe haven for now, congratulations.
Thank you.
I'm sure that will change.
Yeah.
But, like, us having this $10,000 SALT tax cap is a real headache. When we're paying 7, 8, 9% to New York State income tax, we're paying, $33 per thousand, $36 per thousand in property taxes, plus all the other stuff. I think there's some tailwinds here that could really, really be helpful for people watching this video of, like, just be patient this year. Don't let things get in the way. Make that asset purchase if you choose to do so, and let rates come down, let deregulation come into play, and let the Tax Cuts and Jobs Act get extended.
Well, I mean, a lot of the lenders are still offering free refinancing as well.
So within a 12-month period or a 2-year period.
I mean, it started at 12 months and then it was 2 years, and now it's probably till, I don't know, 2035.
Yeah, correct. At some point, just keep this on our book.
Eventually.
I love your optimism. I'm grateful for it, and I look forward to seeing how this plays out. And I really hope that a lot of what it is that you're saying is indeed going to be the future. Because
it's that or nuclear holocaust, right?
Right.
To be clear, it's a coin flip. We'll see what happens. But
exactly.
I choose to be optimistic with a 3-year-old and a 16-month-old.
Well, we have to be.
Right?
That's great. So
okay, fantastic. Well, appreciate all the insight. Again, it's scary, but at the end of the day, to recap, take a breath.
Yeah.
See how it plays out, and buy real estate. I think those are the 3 main things that I heard, right?
I would agree. At the end of the day, when your home is still standing and you don't owe anybody money on it, you can see it, you can touch it from a behavioral finance standpoint. Those are positive things.
Awesome.
Mark, I don't really have anything Rochester news-wise, aside from the fact that it's winter again. I don't know. Is anything?
A few things, and then we'll do culture. This Friday, at least for me, kicks off. And by the way, weigh in on anything that we're going to talk about. So it's culture, it's things that are playing out in Rochester. So this Friday is the first of the many, many fundraisers that I'll be attending this year.
Oh, gala season's begun.
Gala season begins for me Friday, and it's the Boys and Girls Club. So I'm looking forward to that. I think that Lauren and Mike will be there.
They'll be at all of them,
be there.
Sure.
Tom and Jen, the whole gang. So that'll be good. And then Saturday, first night of Seder. Sunday, second night of Seder. So I'm looking forward to that. That should be great. But in terms of things that are going on culturally, I mean, I just finished last night the first season of The Diplomat with Kerry Russell.
Okay, we talked about that last week with Crandall,
Yeah.
No, he doesn't like it. He's making the "it smells weird in here" face.
Yeah. I mean, it was perfectly fine, but they got a little too much into, the infidelities of, the romance of, the betrayals of, the 2 married couples. Not so much.
You want more political intrigue?
I mean, the political interest is
not
pretty
enough
good.
in the
just
world.
not enough. Yeah, just need a little bit more, meat on that bone. So, but everybody is so crazy about season 3 of White Lotus. I think I'm just gonna throw in the towel and just hold my nose.
My wife waited until it dropped at 9:00 on Sunday to watch it, live, I guess, for a lack of a better term.
Yeah, or nearly live. Yeah, and So and everybody's been really great. Nobody's talking about what it is that plays out in season 3, but it sounds the last episode of season 3. So, but the finale sounds satisfying. So
she said it was great.
Okay, good.
I've seen half of the episodes because I tend to fall asleep, and then she just powers ahead.
That's how my house runs.
Do you have that rule?
My wife will put it on. I'll fall asleep.
Yep.
And I just,
lost.
Yeah,
Yeah,
that's
100%.
the extent of it.
I go into the show knowing I'm not going to get too invested.
I also am the king of she'll put it on. I'm like, why are you watching this? And then I'm slowly
See it
inching
sucked
onto
in.
the couch. And I'm like, you know what? This is a kind of interesting plot line. Where's this headed?
Wow.
Well, you mentioned you have-
does that include Real Housewives and you
So
know, like,
that's more my scene. All joking
Come
aside. So yeah,
on.
I'm more.
You're
of
admitting
a
this to all of
Love
Rochester.
is Blind, Love on the Spectrum, shows like that. That's more my. The world's too
Oh,
serious.
you don't know about that show?
no, I know these shows. I'm just aghast.
The world is too serious for me to go sit and watch The Diplomat.
There we
I
go.
spend
Exactly.
too much time of my day worrying about
Wow.
that stuff. I want to go watch a couple on Love on the Spectrum fall in love for the first
Yes,
time. Like
it's-
that's. Last night we watched Connor go on his date and like finally have a successful date in Love on the Spectrum for the first
It's
time.
nice, right?
I'm virtually in tears.
Mark's over here watching Adolescence for fun.
It was great.
We live such different lives.
Yeah.
Well, I mean, you got small kids too, so I and it's interesting, right? Because what you just mentioned with like what you like to watch, and then your optimistic view on things.
Yeah, it's tied. I have a vested
together.
interest. Yeah, correct.
Yeah.
Yeah, no, I laugh when my wife and I first like found out we were expecting. We had tried watching Ted Lasso, and so we put
Great
it
show.
on. And my wife, who is way more in your alley of television, it sounds like she likes the murder mysteries, blood and gore,
My wife as
scandal
well,
type
yeah.
things
Yeah.
like that. And we put on Ted Lasso, and she's like, "This is too wholesome. I can't watch this."
It's too good. Yeah.
She got pregnant the first time with our daughter Isla, and we put it back on. In the first episode, she starts crying, and virtually every episode there forward, just massive emotions and crying. So that's more my scene. I like to feel something, like positive, like there's hope.
No, I love. I don't know. I just, and The Diplomat is. I just like something with like more. So terrible. More intellectual heft. So, I know.
Another heavy lift.
I know you can like. I don't know.
Days
throw-
been hard
throw
enough.
Something. Oh. So.
What do you mean? My new show, The Bondsman, isn't up your alley? Have you watched this yet?
No.
It's on Prime. My dad got me into it. It's about a bondsman, and it starts with a typical crime show, whatever. Not really a spoiler because it happens literally in the first 45 seconds of it. He gets killed, throat slit. He comes to in a wall, and he turns into a bondsman for fighting demons.
Okay.
You're in, Mark. I can tell. Look at the blank stare in his face.
Oh Jesus.